My hat's been a little bit. All right. Hey, guys. Welcome to the 82nd episode of the Phoenix RIA Redroom. And today we were talking about gap funding, of course, with Luke. And then we have Shea Roberts with us as well. And she works for Vantage IRA, which by the way, and we're going to dig into this more, is a great way to get gap funding. So it's definitely a tool to add to your conversation, and we're going to dig into that. But little update: we are to our highest inventory that we've been in, quite a few years. 18,250 actives as of this morning. We've been hovering in the 17s for quite some time. So, and I apologize, I'm in Vegas. I was in my room. There was no internet service, and I'm in a little conference area. So a little background noise that we're going to experience, but I'll do my best to manage that. But so today we're going to talk about gap funding, and this is kind of, I'm a wholesaler, so gap funding doesn't really play a whole lot of role into my business. Although I'm starting to use more of the gap funding because with wholesale just being slower, I'm seeing some of the deals that I'm wholesaling, and I'm like, I don't really want to let it go that cheap. Like, I just don't. I'm like, I'd rather just buy it and take it on, because I know 90 days from now, 120 days from now, the deal is going to sell way better than it's going to sell right now. So I've taken on a couple gap funding partners just, because I don't have, I'm expanding my cash, but I'm just, trying to do that. But Luke, this is kind of your forte, right?
Yeah, I was going to say, just sell me those properties nice and low. I'm good with that. I'm not opposed to it at all, and we'll take on more of them. So no big deal. You won't even have to worry about it. But yeah, no, gap funding was huge for our business. So I mean, obviously, as you guys know, we've been in business for I think about 9 years now, and we started strictly wholesaling because obviously, when you first get into the industry, what do most people do? You start wholesaling because you don't have those funds built up. You don't have that bankroll. So that's what we did. We started wholesaling, kind of built up that bank account a little bit. And that's when we started getting into flipping, because exactly what you just said, Chris. We were wholesaling everything, and we were seeing how much we were leaving on the table. And we would start tracking, and we're like, oh my God, we made $7,000 and they made 65. We're like, why are we leaving this on the table? Like, we need to get a construction crew together, all that. So we built all that out. And then, we started out with 1 flip at a time, 2 flips at a time, maybe got up to 3. And it really wasn't until we kind of figured out gap funding that we were able to really push to, the numbers that we do now. We at the height of 2022, we were doing about 20 to 25 flips at a time. We've dialed that back, after 2022, it wasn't, I'm sorry, 2021, we were doing 20 to 25. Then 2022 hit, and then that's when we dialed it back because it was rough. So we're in that spot now of probably doing about 10 to 15 at a time right now. But where gap funding was absolutely huge for us in that spot, in that space there, was that, if you're not gap funding, you're using your own funds to come up with, say that, maybe for the average flipper, it's going to be, 15 to maybe 20% down. And then depending on, your relationship with your hard money lenders, Chris, obviously we've got a great relationship. So you guys will at least give us a lot of times, 80% on the rehab as well. But if you're a newer flipper, a lot of times you might only get, they might ask you to go 20% down. They might not cover your rehab. So if you're in that spot, we were noticing by the time you come up with your 20% down and fund your own rehab, you might be 80 to 100 grand out of pocket. And so if you're trying to build your business and you're trying to, kind of be able to stack multiple properties at a time, if you're at 100 grand per property, out of pocket, you're at $500,000 out of pocket just to be doing 5 at a time. And so, we were kind of realizing like, wow, we're coming across deals, but it's going to be extremely difficult to really scale this business if we can't, figure out a way to be able to cover those funds up front. And that's exactly what gap funding is, for those of you that don't know. So gap funding is basically finding another investor or lender, whoever it might be, to cover those funds and basically put a second mortgage, whether you put it against the property or not. We have multiple lenders that do both. We have some that are just we've built a really good relationship over the past 7 to 9 years, and they're like, hey, we fully trust you guys. I don't need anything in my name. Just write up a contract on this one and we're good to go. But then others, they want that second against the property. And so ultimately what they'll do though is they will pay that $100,000, that rehab, and they'll pay that down payment. So now it's a little bit riskier because obviously it's the second position. So if anything happens with the property, the property goes to obviously whoever's in first. So it's a little bit riskier. But again, for us, it was really what allowed us to be able to push pretty hard.
So on your, let's call your 10, let's just use 10 as a number of that 10. And let's just say it's a $80,000 a deal. That's $800,000. How much of that is actually your own money, or is it all gap funding and you're using your own cash to build that rental portfolio and all that other stuff you have?
That's exactly it. Yes. I mean, for us, for those years, that's what we did. We used our own funds to just get into rental properties, which is why we have the amount that we have now. And we just used OPM. We used gap funding for all of our fix and flips. So out of that $800,000, on say, exactly what you said, say on 10 properties, we were literally out of pocket $0 of our own at the time. So it's dangerous. It's very dangerous. Like, don't get me wrong, it's risky. But it's what we did at the time. We're now kind of more 50-50. Usually about 50% of our own money, and then 50% gap funders now.
Yeah. So this is where it comes into play with Shea. Obviously I'm a hard money lender here in town, but I don't blend deeds of trust. So a lot of times, for me to sell a deed of trust to somebody, to have that first position, I need, $200,000, $250,000 because, there's just not a whole lot of $100,000 houses out there selling. Right. Yeah. So, and where Shea comes in is she's out there building or selling people, not selling people, but informing people about self-directed IRAs. But someone might have a self-directed IRA, but they don't have $200,000 or $250,000. They might have $50,000 or $60,000. Right. So talk about that, Shea.
Yeah, thank you. So just a little bit of education for the listeners who maybe don't know what a self-directed IRA is. I'll go very high level. So a self-directed IRA is basically a retirement account, an individual retirement account that's not that gives clients the power to invest outside of the stock market. So for people that have retirement accounts, whether it's an IRA or maybe even an old 401k, and that money is being tied up in those accounts at maybe a traditional financial institution like a Schwab or Fidelity, most people have all of their retirement money tied up in stocks, bonds, and mutual funds. So most people just don't know that they can use that money to diversify or to invest completely out of the stock market. So Advantage, all of our clients have a self-directed IRA. It's the same government rules and regulations as far as the retirement account goes, but the self-directed part comes in, which allows you to invest your retirement money in any asset that you want. Real estate happens to be the biggest asset that we oversee here at Advantage because of the opportunities that are involved there. So private lending and real estate, and we're talking about both of those today. But for people that want to invest their money outside of the stock market, and maybe like Chris said, they don't have $100,000 or $250,000 in their old 401k, but they have smaller balances. They can then loan that money to, like you, Luke. So we have a lot of clients who have those lower balances and they're looking for opportunities. And this is such a hot topic, I think, because just, for that reason, having the opportunity to invest, it is a little bit riskier, which I want to kind of have you explain a little bit more as far as the gap funding goes. Yeah. But for our investors who are even more passive investors, we have a lot of clients that have retirement money and they are doing fix and flips with that retirement money, or they are buy and hold. They're buying a rental property, they're becoming that landlord and dealing with all of the responsibilities that incurs. But for people that don't want that, they want to be more of a passive investor, the private lending is a really, really great option for those people.
Absolutely. I think that's a great point there, because exactly what you're saying. As I mentioned, we have different, lenders that some want to be more involved, and they're like, hey, let me start out by giving you, $100,000 and let me turn that a couple times on a couple properties. And then, they might say, but if you ever come across anything that is a long-term hold that you'd be interested or open to taking a partner in on, like, just roll that into it. Like, I'm open to that. And so, we've done that in the past as well. Of exactly, taking that $100,000 and saying, hey, that we now have we have a fourplex opportunity. We need $100,000 down on it. Like, you're now a partner on us on this fourplex. And so that is what I really enjoy and love about real estate is you can be as involved as you want, or you can be completely removed, which is the majority of the lenders that gap fund to us. They are just, let me get a high interest rate on my money. I trust you. So here you go. And then, we pay 12% on our gap funds as well.
Okay. And do you have a minimum that you would work with someone on?
We usually say 40, and the reason being is that a lot of times if anybody wants to put like 20 in with us, at least, we're still typically coming out of pocket, a decent amount on it then. Unless we've got, we buy some mobile homes and stuff like that too, that we'll flip. And, if you're buying mobile homes, a lot of times if your buy price is around $200,000 or something like that, then you can be into something around 20. Because the majority of our lenders, also do kind of for the first position lenders, the hard money lenders, they do give us full rehab. So we're, for the most part, only looking for, between 10 and 20% for that initial buy.
Okay.
Yeah.
And so across the board, you are offering 12%.
Yeah. 12% hard money. I think that's what we pay to you as well, Chris.
Yeah.
And then we're also 12% on the gap fund side. So I mean, it's a really nice thing for for someone who, exactly what you're saying. Say you've got $50,000, and you start. It doesn't sound like it's crazy, but I mean, $500 a month on that $50,000, that's not chump change, especially if it's just sitting in your account doing nothing. So it's like, it sits there. Let's say we hold it for 4 months on a full renovation. You just made $2,000 on your 50. So it's like if we turn that, 3 times in a year, you make $6,000 on $50,000 in a year. That's pretty damn good.
Yeah, that's what we educate our clients on. I think it's so powerful that for people that are maybe frustrated or they're disappointed that they don't have as much in their retirement account as they would like. I mean, who does? We also want more. But those clients that have that smaller balance, this is a perfect way to get your money working for you rather than it just sitting there. The beauty of having that retirement account, what we tell people is, and I even look at this as a person example. If I had that amount of cash sitting in my savings account or my checking account, I'd probably find something to spend that money on. But you can't really use you can't use your retirement money. The government penalizes you heavily for early withdrawal. For early.
Yeah, no, exactly.
So you've got to keep it sitting there. You got to keep it working for you, and this is the best way to do that versus it just sitting there and getting a low rate, maybe in a CD or something. So
yeah, completely
can
agree.
you explain a little bit too for someone that is asking about the risk level and how a gap fund deal works, how all that involves?
Yeah, so I'll jump into that. So like obviously I'm a hard money lender, so I'm generally like a first position lender. So I mean, some due diligence is obviously you got to do your due diligence on the operator. Like there's good operators like Luke, but there's some bad operators. There's just some bad operators out there, right? And
it's a lot of them.
And if you run into a bad operator, your 50 could go to potentially zero if not handled correctly. So just understanding, doing your due diligence on the operator, ask for some of the deals and the stuff they've done. And if they're like Luke would go to a hard money lender like me as first, and then get the gap funder and come into that second position. If you get that second position, especially if you're starting out with this person, go ahead and get the note and the deed of trust. And if you need those documents, DM me over at, Chris_Iman at Instagram, and I'll send you copies of those. But go ahead and fill out the note that says you're going to get the 12% money. Go ahead and fill out the deed of trust that's going to get secured on the property. That way, when they get the deal done, they close it. The title company's going to reach out to you and ask for like, hey, what do you do back? Oh, I'm owed my 50 grand and my 4 months of interest at the $2,000. And that way you're going to get it back into your account, and it's not going to go into their slush fund account. And some people just mismanage money. I'm just going to tell you that. I've seen it in the past. So having that security is good. Now, Luke has graduated past that to where he's got guys that'll just fund the entire deal and the entire rehab. And I would assume, Luke, that those guys are still recording a first deed of trust on the entire project for the acquisition money and the rehab money.
Yeah, absolutely. And I mean, what we've kind of noticed is that obviously when we first got started with them, there's a lot of due diligence being done, right? Like they're taking a look, they're pulling all the comps on that property. They want pictures of the property ahead of time. They're more so apt to be like, hey, we want receipts on the work that's being done. And then once again, just as time goes by, I mean, as we start doing 50, 60, fix and flips per year, that kind of, it can kind of start, I guess they're getting more comfortable with you where they're like, you don't need to send me the pictures anymore. You don't need this anymore. Okay. Because the thing is, it all comes down to confidence in the person that you're lending that money to. Right. And so yeah, I mean, but to hit on your thing again though, Shea, is that when it comes down to risk, right? Like, yes, you want to be aligned with like the least risky people you possibly can, the people that you trust that can get it done. But then things also happen like 2022, right? Where that first quarter, I mean, real estate was booming, the economy was booming, everyone was super happy, whatever. And then May, June of 2022, it just hit an absolute wall. Mm-hmm. And I mean, we ran a lot of our projects at say an 8% to maybe 10% profit margin. So if we're running our projects, let's just say 10% profit margin. So long story short, if we're going to be an exit on this property at 600 grand, we want to make 60 grand on it. Well, if the market drops, in our opinion, it dropped 15%. If it drops 15%, well, all the flips that you're currently holding at that time are now negative, right? So what we ended up having to do in 2022, and this is full transparency, is that we lost a lot of money in 2022 because we had so many projects going on, and then that happened. But what we did is we still paid back every one of our gap funders every single dollar that was owed.
Oh, wow.
So again, like those are the types of things that you want to probably check in on and feel good with, depending on how the contract looks and how it's written up and everything. So we fully guaranteed every dollar and we paid out every single dollar. We've been told from other people in this industry that are a little bit bigger and further ahead that that's really dangerous to do that, to fully guarantee. But I mean, for us, our word is everything. And it's our, it's your name on the line. So
yeah, it's your reputation.
Mm-hmm.
Yeah. So definitely, securing those. And then, actually, if I don't have it with me, but if you want to also DM me, I'll give you like it's just a 1-pager. It's just kind of an agreement that spells out, hey, Luke and Viking is going to take down XYZ property. They're going to put a first in place, which also defines the amount of that first they put in place. So you as a gap funder understand like, okay, they bought it for $200,000, but they only put the first in for 175, whatever that is, especially if you're giving them money as the down payment. It's just, it kind of outlines the entire structure. So bought it for 200, they're a first for 170. Actually have them put in a budget, fill out a spreadsheet for that budget. So at least you have some kind of accountability of what that looks like. Yeah. And then, and once again, if they don't have a flip calculator or a budget, reach out to me. I'll give you a copy.
Heck yeah. I think another huge thing too is obviously, making sure that whoever you're working with is competent in the deals that they're buying and that they do have a background, because a lot of times, if you go to that first time flipper and they're asking for a big chunk down, that there's a lot more risk there because there's not a proven track record of, hey, do you know what you're doing? Like, have you done these before? So that's another big thing, is making sure that, I know Chris kind of hit on that, but show me your background, show me your track record so I can kind of, double check and prove that you actually are doing what you're saying you're doing.
Yeah, I think that's huge. And one of the biggest responsibilities our clients have, that again, that self-directed part comes in, because you truly are in the driver's seat as the investor. It's your money. No one should care more about your money than you, right? So you have all that money sitting there in your retirement account. You do have to do your own due diligence when you're finding deals, when you're working with people and you're, interviewing people, asking for their portfolio or their resumes, so to speak. That's really, really important for our clients to understand that we have resources for our clients. They ultimately have to do that due diligence, and we then help, streamline that action in and out. But what are some questions if someone were to say, okay, Luke, what can you show me? Can you show me your portfolio, your track record?
Yeah.
What does it look like when someone asks you that?
What I would do in that situation is I would ask them to, find someone who's got MLS access. If they don't, then I would just go on to, our Monsoon and show them. What speaks volumes, in my opinion, is being able to show people, hey, go ahead and put in, Viking real estate and just see. So it's like, if you put in Viking real estate into Monsoon and you see, 25 projects, whatever, say 6 of them have just closed, and then you see, say another 8 are under, are on the market, but then of those 8, 7 of them are pending, then it's like, okay, well, these guys are not over their skis. They know what they're doing. They've got 8 that are, that they put on the market, and 7 of those 8 are pending. Where it's like, if you go do that same thing and say someone has, you ask for the entity, you put it in and nothing pops up, then it's a little bit of a red flag of like, okay, why don't you have any properties? Why don't you have any projects you're working on right now? Like, that's a red flag to me.
Right.
Or if they have 10 projects, on the market and all 10 of them are active, that's a huge red flag. Cause it's like, why do you have 10 projects that have been sitting on the market for 4 months and none of them are moving? Because you were not running your holding costs to sit for 4 months for every one of these on the market. So there's just little things that you can do to kind of like, cross reference, I guess, what's being said and what's happening. That's a huge thing I would do. Another thing is I'd say, hey, give me the number of some of your other gap funders. I would like to ask them a couple questions.
That's great. That's great.
And that's huge, because the thing is even, like I said, even in 2022, when we lost money, because we paid every one of them back, I have 7 gap funders right now that I could give a call to, and we have gap funders that are constantly looking to place their money places. And so they reach out to, to me regularly now saying, you got another one, because they want to have their money working for them. So if you've got other gap funders that are willing to obviously say like, hey, no, like we are super happy with these guys. Like there's no one we'd rather work with. Like I said, I'm always trying to put my money with them, but they just don't have enough projects for me, or, at the time, whatever it might be. That's a huge thing, because that, again, that's just proof. That's just a reputable source is saying like, yes, I gladly put my money with them.
Yeah, that's great. That's perfect.
Just on a side note, if you are starting out in this space and you're going to be, someone's going to do some gap funding and you're working with maybe a newer operator, you can always put the project in your name, right?
Yeah.
So, so I do some 100% funding for some people, and that I supply, not just the acquisition money, but the rehab money, but the house goes in my name. We manage it.
We're doing one right now with you.
So it's just like even with Luke, if I'm lending him 100% and 100%, like the house is in my name. So I can, like, there is no foreclosure process, because that's, if you have a deed of trust to get the property back, you have to foreclose. If you own it, you own it. So,
So what would that look like from a gap funding perspective, though? If say you're using, let's say, $50,000 of my retirement account, how would I secure that as the investor?
So as a gap funder, you would say, hey, Luke, line up a first deed of trust with Chris, and then gap funding IRA is going to be the acquisition arm. So Luke assigns it to you. Then it goes into Shea Robert's IRA as the gap funding money, but Shea Robert's IRA is the owner of the property. And so that's a way to do it. That way there is no foreclosure process if they don't do what they say they're going to do. They don't, you know, I mean, heaven forbid you have to step in and rehab it yourself. But anything like that. But like if you're just in a deed of trust and everything goes bad, now all of a sudden you're reaching out to an attorney. You're waiting 5 months for the foreclosure process.
Yeah.
So that's just the way, like I said, if you have a good reputation with someone like Luke, someone like myself, someone that's a good operator out there, that's one thing. If it's a new venture, you got some cash that you're trying to exploit, and someone comes to you and this is a new project for both of you, you could just put it in your own name.
Okay. Great.
Yeah. Try to make it as easy as possible. Honestly, that's what's nice. Like I said, is what we love about when we work with Chris. Obviously, is Angel's the lady that handles everything, and she just sends us the amount. Hey, this is what's owed, upon closing. And so what we do is we just take that settlement statement, or whatever they're looking for, and we send that straight to the gap funder and say, hey, this is the amount that we need. Usually you can have the rehab funds in there as well. They can either give it to you up front or hold it back. Obviously, we always do hold back just because it's safer to do it that way. So, yeah, it makes it easy.
Awesome. And I wanted to point out too, just clarify too, for people that maybe are interested in using their IRA. If you have an IRA or an old 401k or even multiple accounts kind of spread around at different financial institutions out there, and this does sound interesting to you, or you want to be a private lender, whether it's for a real estate project or not, you would easily just transfer any of those accounts, either all of the balance of, let's say, one IRA, or even a portion. Maybe you just want to kind of dip your toe into the private lending side or the real estate investing side with your retirement account. You can move over even a portion of one of your balances that you might have there sitting at Schwab, for example. So you would bring that over and create an account here at Vantage. There's no fee and no penalty, no tax penalty at all to move funds over to another financial institution, regardless of what your financial advisor might be telling you, but it's not true. The government does not charge for transfer of funds. So you can easily move money over to Vantage, having that. Now you'd have that self-directed IRA to where then you can loan money to, say, like a Luke or Chris for these investment opportunities. Just keep in mind when you do get that money back, or when you have that the interest gain, right? So you have that coming back. That's not going into your personal pocket. That's going back into your IRA. So again, all the money going out of your IRA, all the money going back into your IRA. The purpose is for you to be able to use those funds later when you retire. So just keep in mind that any of those gains are not going to be, back into your pocket today. It's all going back into your IRA. Just want to clarify that.
Heck yeah. I like it.
Yeah, just a side note that I don't like. You can use the IRA for gap funding, but like we started to say in the beginning, you can use the IRA to actually acquire the properties as well.
Right.
And then if you have just massive amounts of money in your IRA, you can buy first deeds of trust in hard money from me.
Yeah.
North of 200,000.
Yeah. So if you have 200,000 in your IRA, or maybe you have one IRA here, another IRA at Schwab, you have another little one maybe that you inherited. You have, people have multiple IRAs just kind of dangling around out there, and they're all invested in the stock market. Or if you have a couple old 401ks from other companies that you worked at in the past, you can combine those balances all into one IRA Advantage if you wanted. And if you have 200, 250, 5, however much you have in there, you can loan that entire balance to purchase an entire property, or to fund one of Chris's projects, outright for that entire amount. So,
and Chris, absolutely. Chris, I was going to ask, when you end up having, some of the higher net worth guys that lend money to you, say 2-3 million, what percent do you give on that 2 to 3 million?
10%.
10. Okay.
Yeah.
Heck yeah. Pretty damn good.
I mean, it's 10%, and we guarantee that it stays busy. So it's on us if it's sitting in the bank account. So if you so a lot of people are like, well, are you only paying me 10%? But if a loan pays off and it sits there for 2 weeks, then I'm losing. I'm like, no, I'll pay you 10% the whole time. So it's on me to make sure it's staying staying busy.
Moving around for sure.
That was bringing me to my next question. I don't know how much more time we have, but Luke and Chris, what would you tell someone who says, I'm really nervous. I haven't done this before. I worked really hard for this money. This is all I have in my retirement account, or I'm just nervous in general. What do you tell someone who asks, I know you can't guarantee me 100%, but what are the chances of this thing failing?
Yeah, I mean, like I said, in the past, we've guaranteed it 100%. We just have, and again, that's putting our name on it, which is not easy to, it's not easy to do that, to say I will fully guarantee you your money back. But I mean, that's what we've always done. And in all honesty, I actually kind of took that from Chris when I first got started, because I remember a story of how Chris did the exact same thing, years ago as well. And so, but again, it comes down to your reputation, like you said. And so, it's a scary thing, because I know, like you're saying, a lot of times this is people's, their everything. This is their nut that they're planning on living off of for the rest of their life. And so, yes, I would say, before you do it, just ask the right questions, find the right people, make sure that you are doing your research on whoever you're giving it to, and wherever, you're going with it. And yeah, I mean, just don't just jump at the very first opportunity. Like definitely do your research and make sure you feel good about it.
Right. It's great advice.
Yeah. I mean, I paid back $1.5 million after the financial crisis. So I've paid my money back. Nobody that's actually had money with me in my hard money business has ever lost a penny. I lost $127,000 on a hard money loan in 2022, and I wrote the check, not anybody else. I wrote the check. So it wasn't a fun check to write, but I wrote it.
Yep. And same exact thing in 2022. We on our biggest loss, the biggest loss that we had, it was $160K loss on a deal, and exactly that. We paid the hard money guy back, and then the rest of the loss came out of our pocket. So, you just you got to do what you got to do to be good people and to stay in business and do the right thing. Absolutely.
Well, that's really great that both of you have that policy and that ethic. Right.
Yeah, for sure.
Well, guys, thanks for jumping on. And if you guys are listening about gap funding, if you have any questions, you can shoot them to Luke or Shea or myself. I'll obviously watch the comments on the Phoenix RIA and on the YouTube accounts to see if there's anything coming across. Sorry, there's a little guy coming behind me, so if there's a little background noise, I apologize. But thanks for jumping on, guys.
Thank you, guys.
Absolutely. Yeah, thanks for joining us, Shea. Appreciate you.
My pleasure. Anytime. Good to see you.
Absolutely. You as well.
Thanks, you guys.
All right. Bye.